We've got some parting shots from our guest host, Jim Chanos of Chanos Associates. Jim, there's a new administration that's coming into office, and as a result, you're looking at a whole new arena for places that you're looking for short opportunities.
I think one of the areas that we are most interested in going forward is I think that one way to help corporate America, as well as some of the municipalities and state laws, is to get health care costs under control. And I think there's going to be a real attempt, both through moral suasion, both legislation, and maybe something even more severe, I don't know, to rein in health care costs. And as I like to say, I mean, health care is 16% of our GDP versus 8 or 9 for the rest of the industrialized world. And we don't have any better outputs, any better outcomes than anybody else. And it's growing 2 to 3 times GDP in terms of real terms, costs. And if that continues over the next 2 generations, half of us are going to be doing operations on the other half of us. Mm-hmm. And I have a funny feeling that's not going to occur.
You mean not on yourself, but on another? I don't want to operate. That would be.
That'd be me on you.
Yep, you'd be on me. Where are the fat? Do you need big fat margins?
I think that's exactly.
Where are they fat?
I mean, they're pretty much fat throughout the entire industry.
Through all of healthcare.
Yeah, I mean, there's still the returns on capital and the operating margins for most healthcare companies are margins that the rest of corporate America would die for. No pun intended. And I think that we're going to see a real pressure on getting those costs down, and that's going to hurt margins in the entire healthcare area.
All right, I said Pfizer. It was a $50 stock. It's a $15 stock with an 8% yield. Why would you short?
I don't know that I would short Pfizer.
Okay, so maybe not Pfizer.
But there are plenty of companies out there with
pharmaceuticals, or what else?
As I say, we're just starting our work, Joe. But maybe if you have me on sometime
HMOs,
in 2012,
pharmacy
I'll tell
benefit managers. What do you think?
There's lots of interesting service-related companies as well as device-related companies.
Device-related
that have extremely high margins that I think are going to be under pressure over the next 4 years.
You mentioned an interesting point off air. You said, look, this is something with the high margins. Does that make it the next oil companies? We used to look at them as having this windfall profit.
Except their margins were never that high.
The margins were never that high, but we looked at them.
Defense contractors, same idea, who never have really high margins because they get so much from the government.
Right.
And, you know, whether or not we like it, we almost have socialized medicine in this country. People just don't understand that half the dollars that go to the healthcare industry come from the government. So, I mean, it's already, we have sort of socialized medicine, but yet we still have high costs. We have sort of the worst of all worlds, and if you look at it in that way. And I'm guessing that under this administration and this Congress, we're going to have people are going to say, well, wait a minute, why can't we negotiate drug benefits? Why can't we negotiate a better deal for the taxpayer and for the insured?
You say this is different than 1993 when Hillary Clinton tried it because corporate America is on board now.
It's a lot different, Becky, because in 1993 when the Hillary initiative failed, it was the consumers and the executive branch versus corporate America and the healthcare industry. Now you've had a major shift. One big group, the corporate America, has moved over to the political and the consumer side, and you have it pretty much arrayed against the healthcare industry. That's not where I'd want to bet.
Generics? I mean, generics seem to be in a position to take advantage of...
I'm not going to comment on your portfolio, Joe.
No, I have no portfolio. I'm just trying to figure out a part of it that might not be, that could benefit from cost containment.
Why look for the few that are going to benefit when 80 or 90% of them are going to get hurt?
Interesting.
Okay.
Jim, thank you so much for joining us today.
My pleasure.
Again, Jim Chanos, who's been with us for the last hour, thank you for joining us today.